Good evening, everyone, and welcome to the session of InvestEdge brought to you by LOC Securities. I'm Rohini Kaushalya, and it's a pleasure to have you all with us today. The theme we have selected is navigating uncertainty, market momentum, and the road ahead. And I think this is a very relevant theme for the current environment. Over the last few months, we have seen geopolitical conflicts intensify, oil prices become increasingly volatile, currencies come under pressure, and inflation concerns re-emerge globally. Naturally, investors are asking, has Sri Lanka's recovery lost momentum? Should investors become defensive? Or are we simply going through another short-term adjustment? And most importantly, how do we allocate capital in an environment where uncertainty is likely to remain elevated? So, I will begin with the macroeconomic environment. Let me start with the monetary policy. At the latest monetary policy meeting, the central bank maintained its overnight policy rates at 8.75%. Central bank believes that current policy setting remains sufficiently restrictive to guide inflation back toward its medium-term target. More importantly, from an investment perspective, interest rates today are still significantly below the historic highs we have experienced over the last few years. During the crisis period, we have experienced extremely elevated borrowing cost. Compared with those levels, today's environment remains much more supportive for businesses, consumers, and ultimately corporate profitability. So while rates are higher than 6 months ago, I would still describe the overall monetary environment as investment friendly one. Look at inflation. We saw inflation move higher in June. But if we analyze the numbers carefully, the increase was largely driven by supply side factors rather than demand side pressures. Higher electricity tariffs, higher fuel prices, and rising transportation costs were the key contributors. At the same time, core inflation remains relatively well anchored. Therefore, our expectation is that inflation may edge slightly higher over the coming months before gradually moderating back towards the central bank's 5% target. Now, let's talk about probably the single biggest risk factor uh, that Sri Lanka is facing today. That is the crude oil prices. Brent crude price have been extremely volatile this year. That you can see in this graph also. Every headline coming from the Middle East has immediately translated into higher energy prices. Today, we have once again seen crude prices move above US dollars 100 per barrel level amid renewed geopolitical tension. Because why we need to consider about this crude oil price movements? Because Sri Lanka remains a net importer of fuel. Approximately 23% of our fuel, import bills is related to petroleum products. Therefore, every increase in global oil prices directly affect inflation, our trade deficit, our exchange rate, and eventually corporate profitability levels as well. The encouraging part is that government has recognized this structural vulnerability rather than depending entirely on imported fuel. The long-term energy strategy focuses on renewable energy. Actually, as a country, we need to consider alternatives because we are having a big issue when the crude prices moving up. We have to consider alternative energy sources. So large scale offshore wind, solar and battery energy storage systems, and eventually nuclear energy. At the same time, the transport sector is also undergoing some kind of a structural transformation. The government aims for 50% of new vehicle registration to be electric or hybrid by 2030. And also, these are kind of a long-term reforms. this won't solve today's problem overnight, but over time, they will significantly reduce Sri Lanka's dependence on imported fuel. So, as a country, we need to have that long-term plan because we need to have alternative solutions. That is why government has taken this type of reforms. Say, for an example, that they are expecting 50% of new vehicle registration to be electric or hybrid by 2030. So these are really good reforms that the country should take. And also, if you look at vehicle imports, at the same time, the government recently has introduced a 50% surcharge on vehicle imports. While this may temporarily slow vehicle demand, from a macroeconomic perspective, it helps reduce import pressure and protect foreign reserves. Similarly, the central bank recently revised loan to value ratios as well. These are kind of macroprudential measures aimed at containing excessive credit growth rather than restricting economic activity. Looking ahead, we still see several upside risks to inflation, elevated global oil prices, possible exchange rate depreciation, and also higher fertilizer cost and weather-related supply disruption associated with El Nino also could have an impact to the inflation levels, especially that uh, if you look at the weather-related supply, if the El Nino effect comes to Sri Lanka, then we can see some kind of supply side shocks to the especially into the agricultural sector. Then again price levels can move up, and then the demand can come down. This cycle goes on, so that inflation, when we are talking about the inflation, we have to consider those factors as well. However, you know, recently central bank, I mean, before this recent policy rate meeting in, in 2026 May, central bank increased the policy rates by 100 basis points. That tightening should gradually moderate private sector credit growth and domestic demand. So still that 100 basis points increase is still transmitting. There's a kind of a lag effect when it comes to the policy rates increase. Well, therefore, while inflation may remain somewhat elevated during the remainder of this year, we continue to believe that inflation will remain well below levels of experience during the crisis. So, during the crisis period, the inflation shot up, and then the central bank intervened, and they have increased the policy rates by 750 basis points levels. Then again, we will be able to bring down the inflation. And then as a country, we experience a kind of a disinflation level recently. And then again, we are moving towards the targeted level. And now during the month of June, again, inflation level shot up to 8.4% level. Well, we continue to believe that the inflation will remain well below the levels experienced during that crisis period. That what happened, that even though the crude oil prices moved up, then again, since now we have the monetary policy decisions based purely on the data driven, they have a data driven policy decision making uh, pattern, that uh, they will really consider about this global geopolitical factors when it comes to the policy decision making matters. So we continue to believe that inflation will remain below and it will come down to 5% target levels. Um, Overall, the macro environment remains considerably healthier than historical norms, that what we experienced back in the crisis periods. Let me now move on to the external sector. Foreign reserves are expected to continue improving 2026 and 2027. However, reserve accumulation may not be strong as initially expected. Why? Because foreign exchange outflows are beginning to increase again, because the debt servicing has resumed. That you can see, in this graph ISB repayment structure, that after the restructure, that we are repaying our debts. So debt servicing has resumed, and also import demand has recovered. The central bank has also continued purchasing foreign currency to rebuild reserves, while tourism, exports and remittances continue to improve. These inflows may not be sufficient to fully offset higher outflows, so we expect reserves to continue rising, but at a kind of a more moderate pace. Looking at Sri Lanka's two largest foreign exchange earners, tourism and workers' remittances, that you can see in this graph. Uh, and if you look at the tourism arrivals have remained relatively resilient. However, earnings have declined. This tells us that something very important. It is not the number of tourists that matters. It is how much each tourist spends. Flight disruptions to Middle Eastern hubs and also higher airfares, shorter holiday durations have all reduced average spending per visitor. We expect tourism earnings to recover gradually once regional geopolitical tensions ease. And if you look at the workers' remittances continue to be one of the brightest areas of the economy. Earnings have grown strongly during the first half of the year. We continue to expect around 20% growth during 2026 before moderating in 2027. One encouraging trend is the increasing number of skilled workers leaving for overseas employment. Skilled migration generally generates higher remittances inflows compared to lower skilled employment. Therefore, the quality of migration has also improved. I also believe that Sri Lanka has an opportunity to diversify its tourism offering. One area worth watching is kind of integrated gaming resorts. Countries such as Singapore and Vietnam have successfully used this gaming tourism as part of broader integrated tourism strategy. In Sri Lanka also, recently John Keys Holdings, they began their gaming activities with City of Dreams, opening of the City of Dreams. If you look at this Vietnam, so Vietnam legalized its casino operations in 2017. You can clearly see that 2018, 2019, there's a strong uptick in their tourist arrivals. However, during COVID-19 period, yes, because of travel restrictions, that there was no tourism at all. That is why the numbers have come down. Then again, the gradual picked up. The tourist arrivals have gradually pick up. Uh, that is better than the 2017 period. That is why we say, even if you look at the Singapore numbers, Singapore numbers also, that we can clearly see that once they legalize their gaming operations, then tourism arrivals have improved. So the Sri Lanka has opportunity to replicate this aspect of these successful models while maintaining appropriate regulatory oversights. So more importantly, Sri Lanka must continue diversifying its foreign exchange earning industries so that we become less dependent only on tourism and workers' remittances. So that is why Export Development Board is having different strategies to improve the exports. More importantly, Sri Lanka must continue diversifying its foreign exchange earning industries and especially focusing on different export-oriented uh, sectors, especially service and all. Sri Lanka, turning into the exchange rate, let's move on to the exchange rate. The rupee depreciated more sharply than we initially expected during April and May. The primary driver was sharp increase in import following renewed economic activities. However, with policy rates now at 8.75%, private sector credit growth should moderate. Import demand should gradually soften. However, surge in crude prices can further depreciate the rupee going forward. So as I mentioned earlier, also the today also crude oil prices increase up to about $100 per barrel. So that could have a direct impact to exchange rates. Moving on to the credit growth levels. Looking at credit, you can see that the private sector credit has accelerated over recent months. That is actually a sign that business confidence has returned. But following the 100 bips rate hike in May, we expect credit growth to moderate gradually. That moderation is actually healthy. It reduces inflationary pressures. So, if I were to summarize the economic in one sentence, uh, Sri Lanka is no longer facing a demand problem. We are managing external risk. The economy continues to recover, but the phase of recovery has become more measured, and that is exactly what we would expect at this stage of the cycle. So, what does all this means for equity investors? Market always move ahead of the economy. Therefore, what matters isn't today's headline, but tomorrow's earnings. Although macro uncertainty has increased, we continue to believe corporate Sri Lanka remains fundamentally resilient. So we have seen that the corporate earnings grew approximately 25% during 2025. However, we expect some kind of growth moderation during 2026. So we expect earnings to grow at 7 to 8% during 2026 uh, amid higher energy cost, rising operating expenses, and geopolitical spillovers will weigh on the margins. However, we expect stronger recovery during 2027 as the pressure gradually ease. Let's look at the market momentum. So, in this chart, you can see the movement of the all share price index that we have plotted this graph as an event analysis that you can see for each in the event how the market reacts, that you can see soon after the presidential election the market uh, had a kind of a bull run, and then again in recently we have seen in 2026 with the geopolitical, I mean the war started in the US, Iran and Israel war started, and then market showed a kind of a slight drop. So this is the markets are highly volatile. It always uh, forward looking. When you invest in a stock market, you have to look at the news, what is happening in the world and the corporate world, what is happening in the corporate world, their earnings, what could be their earnings in the future, and also you have to look at a lot of other factors when you're investing in stock market, and especially if you're a long-term investor, you have to look at fundamentals. You have to look at whether the market is trading at a discount to the regional peers or not. And then you have to look at the corporates, individually sectors, which sectors are going to perform in during the next couple of years. You have to have a broader understanding about the market, especially if you are investing in a stock market. You have to be in very vigilant about the market, the movement, especially what is happening outside the country and what are the impacts from this events and all. So that is why we are always telling that market is heavily volatile. So when you are investing in stock market, always focus and read the news and understand each company's revenue drivers, cost drivers, and what would happen to the market, and then only you get an idea about the company and look at their peers performance as well, and then make a decision. So let's move on to the next slide. Sri Lanka remains one of the, in here you can see that how the market performed during 2020 to 2026 period. So you can see 2024 was one of the 2023, 2024, 2025 period was one of the best periods that in 2024, soon after presidential election, that the market saw a gradual uptick and then we've seen the market rose to 49 gain 49.7% year-over-year growth to reach 15,944 levels. And then again 2025, that momentum, the political stability and the key economic reforms that we've entered into the IMF program, and then we have a lot of, as a government has done a lot of fiscal reforms, uh, and also the monetary easing. This all reflect that 2025 growth momentum. The 2025 is so that market gain about 41.89% to reach 22,624 levels. But when it comes to 2026, market reacted negatively purely because of the external front factors, because of the geopolitical tensions. We've seen the turnover levels are a bit of thinning, investor confidence levels have narrowed down, and market, if you look at with the current market condition, it has dropped by 6.3% year to date. Well, that is why I'm telling you this market is a kind of a cycle. So when you're investing, have a kind of a long-term perspective. So if you look at the market turnover levels, the last year, the average daily average turnover levels stood at 5.1 billion rupees, and 2024 we've seen 2.2 billion daily average turnover. Uh, and if you look at the foreign purchases and sales, foreigners were net sellers throughout 2024, 2025, 2026. Actually, if we are to attract more foreigners into the market, we need to have a credit rating upgrade. So until that, we might be able to see some kind of foreign selling activities in this market. If you look at the market price earnings ratio, it's at 11.09 times currently, and the price to book is 1.28 times. Uh, Let me move on to the next slide that you can clearly see that the regional peer valuation comparison. You can clearly see that Sri Lanka is still trading well below its peers. Uh, that is one good thing, that Sri Lankan equities look remain more attractive compared to the regional peers. We continue trading below many of our regional peers on both price earnings and price to book multiples. That means much of today's uncertainty is already reflected in valuation. History tells us that the period of uncertainty often create the best long-term investment opportunities. Therefore, our preferred strategy is selective investing rather than broader market exposure. So when it comes to today's context, we have to look at individual stocks, and we have to go for selective buying that the market has reacted that, as I mentioned, that 2026 the market levels, the market contracted, and still we believe if you're a long-term investor, we believe there's selective buying in this market. So for an example, the sectors such as financials, banks, NBFI, and real estate sector. So the banks can continue, because if you look at the bank's loan books, most bank, because as I mentioned earlier, there's a strong credit, private sector credit growth, and the bank's loan book has expanded. With that, we'll be able to see more interest income going forward, and also with the rising interest rate environment. So most banks they reprice their assets than liabilities. That means the loan rates are increasing, but they gradually increase the deposit rates. Then their margins can improve. So they quickly adjust the assets, the interest rates, and the margins can improve. We have seen most of the banks' margins shrunk in a very conservative way, but going forward, with the interest rates rising, margins can improve in the banking sector. And if you look at their other income like fee and commission income also can improve. Still, we are expecting strong remittances and also digitization measures, government and even the new generation, they all use credit cards, card transaction volumes have picked up, and also that in the fee and commission can improve in the banking segment, banking and non-banking segment. The only concerned factor is the NPL levels because of the higher inflation and the rising interest rates. The NPL levels can improve, NPL levels can increase, so that will negatively affect to the bottom line of the bank's uh, income statement. That is the concern that we have to look at the in rising NPLs. However, most banks, if you look at the banks' banks can improve their profitability levels going forward. The key concern is to look at their non-performing loans. And if you look at the capital goods sector, because we have seen a lot of government infrastructure and business expansion are there, infrastructure project developments are there, and uh, rene- uh, and also there's improvement in the construction sector activities as well. If you look at the PMI indicators, those are kind of leading indicators. Purchasing managers in manufacturing index and services index have improved during this year. So that is a kind of sentiment that we can see. The economic activities are picking up since PMI manufacturing and services indexes have improved. The construction sector showing a kind of a little bit of improved momentum. So with that, material segment also can have a positive impact. But we have to keep in mind with this rising crude oil prices and the rising commodity prices, most of the materials, raw material input cost can increase. That have a kind of a high pressure on the margins when it comes to the material segment. And export oriented counters, when there's a kind of a currency depreciation, we have to look at the export oriented counters, uh, and those are with some kind of key uh, they have some kind of a pricing power, the companies. So we have to select those companies when we are investing in the stock market. So that is one key segment that we can have a look. And also the defensive stock in this kind of environment, if you're a long-term investor, you can probably go for defensive stocks with giving some high dividend yield. That there are companies with high dividend yield companies that you can see. This some companies they pay really good dividends to their investors, and also defensive stocks. That means especially the conglomerates. That you can look at the companies, they are diverse, they have diversified business activities, and then most of those kind of companies you can go and invest in, because they are naturally, since they have a lot of investment activities, they have diversified their business activities, those risks can mitigate when you invest in those kind of stocks. Uh, the next phase is the risk matrix. When you are investing in stock market, you have to consider the uh, risk aspect as well. So that risk is remaining. So you know oil prices will go up and geopolitical developments are there. Inflation risk is there, exchange rate is volatile, and global economic growth will all require kind of a close monitoring. But successful investing has never been about eliminating uncertainty. It has always been about understanding uncertainty better than everyone else. We have to understand that there's uncertainty there, but we have to understand that understanding under uncertainty is better than, that is something you have to be mindful. each investment, there's a risk component, but you have to understand the risk and analyze the risk levels, and then you can make your own decision in the market. So this is actually we brought in LOSC Securities. This session was to give some kind of understanding about what is happening in the market and going forward, what is the expectation. Well, so when you're investing, let me conclude with three key messages. First, Sri Lanka's macroeconomic recovery remains intact despite heightened global uncertainty. Second, we expect growth to moderate rather than reverse, with inflation remaining manageable and monetary policy continuing to support long-term stability. And finally, equity market continue to offer attractive opportunities for patient investors, while volatility may persist in the short term. So the long-term wealth is rarely created by reacting to every headlines. It is created by remaining invested in quality business through different market cycles. As investors, we cannot control geopolitical events. We cannot control crude oil prices. And we certainly cannot predict every market movement, but we can control our investment discipline. So when you're investing in, you have to read, you have to understand the market, be you have to go through all the news headlines and what is happening in the market, that what are the impacts to the that particular information. When you read news, what would be the impact to the next, I mean the corporate earnings, something like that. So I think I have completed what the things that I uh, plan to share. So if you have any kind of questions, you can ask now. I'm sorry, I was muted. Yes. You have asked about this discount prices. As researchers, what we are doing is we've look at a particular company, and we do a kind of evaluation by looking at their future earnings prospect. We have different approaches to value a company. So one aspect is a kind of you have to look at the intrinsic value of the company. That is kind of absolute valuation. The other valuation is the comparable valuation methods. So in when it comes to the absolute valuation, uh, you have different approaches like discounted cash flow method. You can use you can forecast the future cash flow levels of the company, and then you can derive there are some techniques to deliver using a discounted cash flow approach. You can get a intrinsic value of that particular company. If you compare it with the current market price, if that company's intrinsic value is higher than the current market price, then we say that that particular company is trading at a discount, right? The other way is by looking at the comparables. That is, you can use different multiples like the price earnings ratio and the price to book value. By looking at that particular company's price earnings ratio, compared it with the sectors, we can say whether it is trading at a discount or a premium. That is how we derive these prices. But there are a lot of reading materials. You can just go through the internet and see how to derive prices. This is because it's a very lengthy process that I can't explain one step by step. But just to give you an idea, so we do a kind of a forecast about a particular company. Say, for an example, I'm working on a company called Tokyo Cement PLC. So we go and meet the management, and we read the management discussion and analysis, and looking at their past performance, and also with the given with the set of information that what we gathered, we forecast the future cash flows of the company, and using different, we need to get the cost of capital, and then you have to derive the intrinsic value of that particular company, and then we decide with if that intrinsic value is less than the market value, that means market value is much higher, that company is trading at a premium, then we say it's a sell. If that particular intrinsic value is higher than the current market price, we say then that particular company is a buy. That is how that you decide the whether it is trading at a discount or a premium. The other method is the comparable method. So you can use the price earnings ratio of that particular company, compare it with the sector or the market. You can say whether it is trading at a discount or a premium. The next question is, hi, is it possible for us to know the most performing or least underperforming stocks since the war started against ASPI, to identify uh, leaders possibly when the market sentiment returns? Uh,
Excuse me, we can't hear you.
I'm sorry that we have the second question that you have asked about the price. What are the companies that declined or gained a lot soon after the crisis? We'll share the screen. We have a small analysis done on it. This is actually based on the 2nd January, that is the beginning of the year, not the date the war started. But you can see most of the companies, their price levels have declined during the year. That is why I told you that the market has come down by 6.8%. So that you can see in this list, most of the companies' price levels have come down. So the York, the price levels have come. There's a subdivision on it. That is why the frontliners, the first few companies, the price levels have dropped in a significant way. But if you accept to that ones, you can see that the Pan Asia Power and there are a lot of companies price levels have dropped. Well, the Pan Asia Power, the price levels have come down from 26 rupees and 20 cents to 15.5. NLG non-voting has come down by 39%, EBCR 38%, Cognizant 37%. Likewise, you can see in this chart. If anyone wants, you can drop a message to us. We can share this with y'all. Or else you can subscribe to our LOLC Securities WhatsApp channel is there, so you can get those information via our WhatsApp channel. Yes. Is there any questions? Can Sri Lanka sustain its upper middle income status in 2027 after starting to pay off its foreign debt? Yeah, I believe yes, because we think we have negotiate with the even international sovereign bonds. Uh, we even during the presentation I've shared that we will be able to repay our servicing our debts. Even we can improve the reserve levels. So probably that my answer is that we will be able to sustain into the upper middle income status in 2027, because we have done as a country, we have done a lot of fiscal reforms, and also central bank independence. They make decision based on the data driven information, and also in the government side, also in the fiscal fronts, government revenue has improved, and on that front also that we can see there are a lot of improvements are there. So going forward, we will be able to sustain into that level. Sure, we'll share the WhatsApp channel details to you. And also, I wanted to mention that we have our website, you can get the stock screener. That is, there's a stock lens. So all the information are there for that particular company, like their price earnings ratio, price to book value ratio, and then you can compare it with the sector as well. Uh, this is freely available to anyone. That you can utilize when you are making informed decisions. And also there's a dividend tracker, and also there's a dividend calendar as well. So if you want to invest in a particular company that pays dividend, that you can just select on that the just search on that particular company, and then you can get more information about their dividend tracker, how the company perform. And also you can go log in, just drop into our website, that is www.llcsecurities.lk. So you can get make informed investment decisions. So someone has asked about LOFC. LOFC, actually they have announced a share buyback. That is an internal decision. The company has made an internal decision. So that based on that, if any investor is willing to sell, I mean, the company is buying back the shares at 7 rupees. Currently, I think today the price reacts to the announcement. That is purely because of a kind of a company's decision. I think it's this share buyback is something similar to a dividend, that if anyone wants that anyone can sell it, because the company is offering the price higher than the market price. So anyone can sell it to again sell it to the company, and then they can get a higher price. This is actually, this announcement is made with the internal discussion with the management. I think that is how. Yeah. Yes, Viraj, you can ask your question.
Uh, Thank you very much for giving me the chance to ask my questions. What do you think about the coconut industry in the future? And do you predict anything or worry about the bad weather conditions that people are predicting, El Nino conditions and other bad conditions? What do you think about that industry?
Yes, that is actually having a concern with this El Nino conditions. If the El Nino condition come to Sri Lanka, then actually it affects to all the agricultural sector uh, industries, especially even the coconut industry also can have a kind of an impact with this El Nino condition, and then the yield can come down. So that is actually based on this El Nino condition. What and also we've seen the fertilizer price levels also have increased with this geopolitical tension. With that also the cost pressure is there, and the drought situation, if that is increased, then it will directly affect to the coconut industry, and the yields, the yields, the crop yields can come down. That is the expectation.
Thank you.
All right, seems like there's no any other questions. Thank you very much for joining InvestEdge. Just another question. What do you think about recent tax reduction to the goods which export to US? How this decision gonna affect? Yes. Uh, One of my colleague uh, did a small analysis on this, so we can answer to that question. Give us a little time.
Can you see the screen? We can do that.
Yeah.
So basically, it's not necessarily going to have much of an impact on Sri Lanka, because what you can see is that the US code, the US judicial system basically struck down the mechanism by which Trump was enforcing his tariffs. And so what has been put under the guise of labor, some forced labor legislation, is just a mechanism by which the US is using to maintain the 10% tariff. So what you can see is that since Trump took over and started doing his tariffs, we've gone from 44 to 30 to 20. And this 24th February, we went to 10. And then this 10, which is the Section 122 surcharge, was basically struck down by the courts. And in place of that, they have put it under Section 301. And it's based on forced labor implications. And because our government put out a gazette recently banning imports from countries that have forced labor, we are on the 10% tariff bracket. But there isn't necessarily a change to what our previous tariff was. So we're basically in the same scenario.
All right, then I think we have answered most of the questions. So it, thank you very much for joining with us. Have a good day.